Hello aspirants, welcome to I.A.S Academy. In this video, we learn economic question and answer. This question will be helpful to you write the answers in mains of the UPSC Civil Service examination as well as your state PCSC exams. Today's question is India's declining net household savings. About this topic, we can learn how to write an answer. Recently, the data from the Reserve Bank of India reveals that India's net household savings are at 47 years low. It means it is standing at 5.3% of GDP in the fiscal year of 2023, down from 7.3% in 2022. This decline is accompanied by a sharp increase in household debt, it reaching the second highest level since the 1970s. It's almost 5.8% of the GDP. Let's understand what is the household saving rate. The household saving rate refers to the percentage of disposable income that households save instead of spending on the consumption. It means the household savings refers to percentage of disposable, how much we spend for our daily needs and saving all the expenses. It is a key economic indicator that reflects the proportionality of households to save the future. Let's see what all the topics or any parts is consist in the household savings. The first part is financial assets. That financial assets include the cash, bank deposits, retirement funds, insurance policies, stocks, and other investments. It's all comes under the savings part. The second part is fiscal assets. In the fiscal assets, there are investments in the tangible assets like real estate, land, or property, or like this, intangible assets as considered physical assets. The third main part of the household savings is gold and silver ornament. Today, our women or girls are very likely to buy the gold and silver ornaments. This savings in the form of precious metals like gold and silver jewelry is a considered as household savings part. It is a higher saving rate indicates greater financial prudence and potential for investment. While a lower saving rate may be suggest higher consumer spending and less saving for future needs. The household net savings are the total money and investments families have. How much they have or they are earning, in that how much they are spending and how much they are saving. It shows the household savings rates like deposits, stocks, and bonuses. Any money they owe, like loans or debts, it's all comes under final picture is shows how our saving rate will be. So, why our domestic saving is important? particularly our India's economy. The domestic savings are vital for India's economy as they fuel investment in key sectors. For example, like infrastructure and industries. This capital formations supports the economic growth not only a person or a family, it supports all over the country and its country's economic growth, and it will help to create job as well as it shows the prosperity of the country as an individual also. So the domestic savings is very important. Then let's see what is the household debt, because the domestic savings rate will be considered how our household debt will be. The household debt refers to the total amount of money that individuals owe to creditors, such as banks, financial institutions, or other money lenders. How much we have the lenders or creditor, what is our percentage earning to going to the for example through the EMIs or any interest, like this how much we are spending, that will be considered as household debt. The reasons of declining household savings in India, particularly in India, is the low interest rates discourage the savings from the banks and other financial institutions by giving low interest rates loans. For that, people are running behind the loans. They are not thinking about future debt or how much they are spending in the debt, how much their earnings going in the name of the debt or EMI or interest, they are not planning particularly. And second reason is rising inflation, it reduces purchasing power. When a country's or a person's particularly earnings will go ups and down, that inflation reduce the purchasing power of the person or individual. The global economic uncertainty, such as the Russia Ukraine war and Gaza crisis, led to precautionary saving. And the changing consumer mindset favoring current consumption over saving for the future. The consumer mindset always changes. It's not be stick on a particular thing or particular part or particular taste. That my mindset of the man or particular individuals always fluctuates. So this is also a reason to be declining of household savings in India. And next reason is lack of adequate financial literacy and planning. As always, already I told that planning the when we take a loan or when you do something or purchase a some particular thing, we don't plan the future effects, we don't think about it. This lack of adequate financial planning also a reason of household savings decline. And finally, increasing cost of living outpacing income growth. Today's living lifestyle is more than income they are planning, and their living lifestyle is expensive. So, so that also one of the main reason when our lifestyle is more than earning we spend we going to borrow the money. We are not able to save the money or save the things or invest any other places. So the increasing cost of living also a declining household savings in India. The reasons of the debt increasing in India is higher borrowing, already I told you, for consumption including consumer durables. That increased reliance on debt to fund expenses and investments. The growth in non mortgage loans such as farm and business loans. The credit widening with more borrowers taking out loans rather than credit deepening. I already explained it how we are taking the loans without any planning or our lifestyle more expensive because of this credit widening and more borrowings are from the house loans. This will creates house increases household debts not only in India, in everywhere it's happening. Because of that, all over the world we were facing inflation problem. As households borrow more, the support of consumption, their savings diminish. Yes, when we our lifestyle is cost living of the cost is increases, our savings will be get start diminish. This increased borrowing means more income goes towards debt payment. How much we earn that will goes to the EMIs, loans or interest. Like this it will be goes. We cannot able to invest in the savings matter. It's reduce the amount of available for saving. This also one of the reason we our India's household savings are decreasing. There is a fall in the household savings can have several macroeconomic implications in the micro as well as macro. Both the sides there is issues are part of the debt and increased household debt. The fall in household savings means people have less money set aside for the future, which can lead to more borrowing. And the impact of high interest rate when the policy measures like higher interest rates aimed at controlling inflation can inadvertently lead to increased household debt levels. It will be potentially trapping them in debt cycle. They cannot be clear or come out from that debt cycle because their life of living cost is day by day increasing, as well as their debt also increase or it will be multiplied. The third point is effect on demand. The high rate of interest can weigh on households' ability to consume, thereby reducing demand in the economy. The fragility and joblessness, this also one of the main reason when a person or an individual doesn't have the work, he is unemployed, his savings maybe get diminished, as well he push to the credits or debts. This shift towards a more financialized economy could make a economy fragile and potentially lead to job losses. And another thing is main thing is rising inequality. The rise in financial liabilities with falling assets levels could be a sign of rising inequality because many people doesn't have the money to take a bread for a particular time period, but there many others are spending for their entertainment. This inequality is also one of the reason of declining the household savings and l- fall in economy in a particular country. Depends on foreign capital. A dip in household savings would lead to more depends on foreign capital to fund growth. In India, at present, many of the companies are depending on investment or capital from the out of the country. These all the problems were there in India. What should we take or steps to take increase the household savings in India? The first point is implement initiatives to enhance financial literacy among households. The financial literacy or financial knowledge is very important a particular person or individual, because without knowledge or unknowingly or knowingly the financial illiteracy will be create more problems or more debts. The financial literacy empowering them to make informed decision about savings and investments. Today many rural area people doesn't know about the investment insurances policies. We should give them the financial literacy, the financial knowledge, what how they can invest or save the money from their earnings. Second one, introduce tax incentives or deductions for savings instruments such as retirement accounts, fixed deposits, and insurance policies to encourage household to save more and more. The government savings schemes. To promote these savings in India, the government sponsored savings schemes should be implemented like Public Provident Fund, National Savings Certificate, Sukanya Samruddhi Yojana to attract the households to invest in safe and secure avenues. If the government come for it, this all the schemes are already implemented, but this schemes didn't reach the every single individuals. The scheme should be reached everywhere all over the India, and this scheme should be give the more information what are the benefits they get from the schemes. Employer contribution should be increased or encourage employers to contribute their employees' retirement savings through the schemes like EPFs or national pension systems. Financial inclusion also helps to increase household savings in India, that expands access to banking and financial services in rural and underserved areas to include more households in the formal financial system. This will be offer them opportunities to save their earnings. This all the points should be considered to increase the household savings. Let's see how what are the steps are required to reduce the household debts, particularly in India. The debt counseling services, because the debt counseling service is very important today, because in the low interest many people doesn't think about the future and how interest rate will be goes, how many years, the tenure of the EMI, that doesn't consider. So we need to give the financial knowledge or information like debt, how debt will be worked out in the particularly bank as well as financial institutions. The establishment of debt counseling services, it will provide guidance and support to the households who are suffering or struggling to clear the debts or manage their debts. For them, the debt counseling service will be helpful. Regulations of lending practices. At present, we have many regulations for the lending practices, but it's not working as we expected. The implementation should be stricter regulations on lending practice by the financial institutions. It will be prevent predatory lending and discourage the households from taking on excessive debt burdens. So the regulation should be stricter, and that a regulation which is available at present we should be implement as well as good thing. Debt relief programs. Introduce debt relief programs or schemes to assist a household facing financial hardships. Example, farmers. Particularly, many for time the government of India as well as states governments were given debt relief programs to the farmers, as well as today our household people also individual also suffering from the debts. That interest rates, giving the relief from the interest rates, the debt will be get reduced to their debt. Alternate financing options, it's very keen thing, but we need to give them alternative financial options to promote alternative, such as peer-to-peer lending, microfinances, and community-based savings credit groups as alternatives to traditional banking loans. It will help to reduce the debts. But household access affordable credit sources, which is reasonable terms and conditions are required. While some interrupt reduced saving in India has a sign of confidence in future income prospects, others express concerns about financial fragility and sustainability, especially given India's low per capita income among G20 nations. If it is goes like this only, the situation underscores the delicate balance between consumption aspirations as well as inadequate public amenities and income instability for Indian households. So the household saving rate should be increased, the debt household debt rate should be decreased. Then our Indian economy will grow as well as the economy prosperity will come for individual. So when we take the credit or take the loans or borrow the money from the money lenders or from financial institutions or from the banks, we should think twice or thrice while before taking the loans or borrowing the money. The savings is very important in a particular individual. It will give the prosperous life, and the living cost will be get should get reduced. This all for this topic. As per my information, I given the information. If you need to add, you can add some points and write your answer in the mains exams in UPSC as well as PSC exams. Thank you.